My check, my check, my check, my check, my check, my check, my check. Alright, what it do, what it do, what it do, what it do, what it does. It's your boy back with another trading recap. So this one gonna be a little quick one. So let's break this down. So you see how the market was literally up here in pre-market, right? Pre-market, new day opening gap, sorry, new week opening gap, and it's going up. So the market ends up opening here. And you see what we do. The market opens and just goes down, creates a fair value gap. Look how we pull right back into the fair value gap and then displace lower. And then as you see, we actually kind of like kept displacing lower. So the only entry literally to go short was at the market open, you just go short, which is not a high probability setup. So on this short here, look how it dropped, creating a fair value gap. I have the wrong thing drawn here. It says an inverse when it really should be a SIBI. So you see how it closes and it comes back up, right? Close, back up, retest, and then dump. And you see how we never get a retest of this zone here. And then we just drop. So now we have this fair value gap that we're going to be anchoring it to on a 1 minute, right? So now we're on a 1 minute chart. And this is where the play happened that I caught and took a loss. So I was expecting it when it came down here, when it came up, I was expecting it to go lower. But because we was just look at all of the bullish order flow, it was respected on the way up. So it kind of like faked me out. So look at this. We got an order block, down closed candle. Most sensitive part is from the opening price to the top wick. Look at that. Look how we have this inverse fair value gap here. Look at that. Look how we got this bullish fair value gap right here that never get traded into. So that is called a breakaway gap. Look at that. And then now look at the other bullish order flow. We have an order block here. And then we have another down close candle creating another order block. So this is a propulsion block. So we're looking for a speed. So bomb, we run all the way up there, right? So this is where I was expecting for me to go long, right? And I was totally wrong. So it was, I'll say right here. So we have this inverse fair value gap that I was expecting it to use to go higher right here. So you see how we got above here, we came down, retested the inverse, retesting this down close candle, which is the order block. Look how we come into it here. And then we rally above and create another order block here. So when we actually created this order block here, first of all, this I didn't have this zone right here on my chart. Right, I didn't have that on my chart. So once we close above here and we create an order block here, once it came back and retested it, I jumped in immediately. Wait, I actually jumped in immediately. Boom. When I was supposed to wait. But anyways, I jumped in immediately and then you see how it's holding, right? It was holding here for a while. So that's where I had caught my long position at here. Caught it up here. And my stop loss was right here below this order block right here. This bearish candle right here. And that's how I got stopped out right there. And it was cause of look at all the bullish order flow, and then it was holding above this zone, this inverse here. You see, I was holding, then we created the order block here. So it was kind of a FOMO. I thought it was gonna just run up, but I was thinking short the whole time. So let's go over the short play. So you see, we had that. Let's bring back that 5 minute fair value gap, which was SIBI. All right. So we hit the SIBI here. Look how we just touched it. So let's delete this right quick. Let's redraw. Let's redraw everything. So I'm gonna leave this inverse here because you see how it got above and then you see how it used this bullish fair value gap right here, right? See how it used it? to go up. So I'm gonna leave this zone here because once we get underneath it, you see how we want to use it to go down. Love the order flow. All right, so all right, so now we up here. We hit the 5-minute CB, come down, right? Do not make a market structure shift, right? Do not make an order block. Do not make no fair value gap. Comes up again. So we sweep out internal high. And then we drop down. We do not make a market structure shift yet. We come up and then on this close right here, that was the first market structure shift. So look at the order block here. You have this bullish candle here. So you have the OB's wick, which is the most sensitive part of the order block. Look how we closed. We closed right here. Boom. Right? So once we close here, we validated these bullish candles as a order block, right? And there's no fair value gap in this leg here. So there's nothing to use, no inverse, because we will usually use an inverse fair value gap and the order block coupled together. But then you see how it dropped, bomb, hit this bullish fair value gap. Look how the bodies never closed underneath it. Look how the bodies never closed. It was a wick, and then it ran all the way up. So look how it ran all the way up right to this order block that's right here, this green candle. The opening price here and the low wick here. You extend that through, and look how it touched it to the T. Look at the bodies in the lower half. Look at the wicks is up here. So this was supposed to be my real short right here. That's where I was supposed to go short at. Because that's the retest. Or at right here, stop loss above the order block. And then targeting some of the lows. Or I could have went short. Alright, or I could have went short here. I could have went short here the moment it closed, right? And kind of like front ran it in a way. Once it closed here, I already understand that that's the order block, and I could have just. But the better trade was to the better trade was to catch the pullback, right? Because remember, the market has to do 4 things at all times, right? Which is generate liquidity. Then it has to pull back, so we generate this high, and we generate these lows. So we come down, we sweep out these lows, and we pull back to this inefficiency, which is this inverse value gap. And then what we do, we already swept. Now we pull up again, generate another high, also pulling back to an inefficiency, which is also a PD array, and then we generate more lows, and now we just target the rest of the lows, right? So the market has to do 4 things at all times, which is generate liquidity, then it's going to hunt the liquidity, then it's going to pull back to equilibrium of a range, then it's going to pull back to 50 to a fair value gap. So the 4 things it's going to do is going to pull back to equal. So it's going to generate liquidity, then it's going to hunt the liquidity, then it's going to pull back to equilibrium of a range, or it's going to pull back to a fair value gap, a inefficiency. So if I draw this high to this low right here, look how it pulled back right to 50%, which is here. It pulled back right to the inefficiency and equilibrium. The inefficiency, which is the PD array, is also that's near the zone. Then we go lower. So that's my trading recap of the day. That's what I messed up with. That's the play I should have caught. And you see it gave us a nice almost 150 points. Even though I didn't take the lows, but you can't be greedy. And it's a Monday, so it's really it was a no news Monday, so you wasn't put a trade anyways. All right, I'm parched. I'm out of here. Let's get it.